screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets call.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is a vessel, the compass is true. Breaking every barrier, breaking all through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance-based drawdown, standing strong through it all. Seacrest Markets, leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than a payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision.
Welcome everyone to today's live. Great start to the week. Yesterday was pretty much of a tug of war of the market. How did everyone trade yesterday? Did anyone get any longs in whether it be the US 500, the Dow, any FX pairs, gold, silver, or did they all wait for the US sessions? So getting long maybe into the ES, which did hit 7,000. Now, bearing in mind, on Monday, the first live that we had, 7,000 was the target, and we hit that yesterday. Of course, we faded away, so we're not trading above 7,000 anymore, but we hit that target. And I said on Monday that would be the target. Definitely. Let me just grab my coffee, everybody. Good morning. Hello, everybody. What positions did people have on yesterday? I had a long on ES in the US markets. I was pretty much using all of London to piece out where the markets were realistically going based on the Tuesday trading, the Monday trading, the hangover from the geopolitical events. I think it was realistically bound to happen heading into this week with non-farm payrolls. We're not sure where this kind of month's going to phase out to. But I have an old unused $500 account back from when it was my funded effects. How do I get it back? So first of all, if it's inactive zone, please go and check out the FAQs because there are inactivity rules. If no trade's been placed at a certain duration of time, the account will default and breach because of inactivity rules. So go and check it out. If you are obviously looking to get back into trading, then there is a discount code running across the screen at the moment, 25% off. It's a BOGO offer as well. So that means that you get one account for 25% off. If you pass at your first payout, you will get a second account completely free. So if that inactivity rule comes into effect for your old account because you've not traded on it as per the rules, then we'd love to welcome you back. There's a 25% off code there for New Year 25. Plotting EU sells. Let's take a look at euro dollar. Plotting EU sells. Okay. Whoa, what's happened there? Do you know what? Ever since I started streaming, I'm finding that things are going wrong. Things are playing up. And I don't like it. Give me 1 second. That is not a pretty sight for you all. Let me see something. Maybe more years. I never touched it. I just bought it and left it. Oh, wow. Yeah. Again, check the rules, Owen, on the FAQs, because unfortunately that definitely would have come down to inactivity and breach, which is unfortunate. I apologize for that. You should have traded it, but unfortunately the rules are the rules. All right, so let's look. So we touched on euro dollar yesterday, and just to give a quick recap, we were joined by, oh my goodness, I know who we were joined by. Wiz. Yes, well done, Wiz. We were joined by Wiz. I was going to say a newbie, but I couldn't remember the last bit. A newbie. He is plotting longs on the higher time frame, and we were discussing the potential idea for getting shorts on lower time frames to realign with higher time frames. So I definitely see the understanding of it. If you look at the way markets traded yesterday as well, like I said, we rallied into those highs, 49,000 across the Dow. S&P traded over 7,000. And risk was pretty much off. So after we traded into those levels, everyone was just taking profit. So daily, I could always mark this up every day. This new mic's killing me as well, where it's situated. That's why my old mic has a boom over the top, because I just keep smacking this one. It does my head in. Let me move it a little bit just so I can see my features. So this was realistically the last point of demand on a daily perspective that I would have looked for to hold, because I would have wanted to see this respected. Then I would have liked to see that continuation to trade above 1.20. I mean, who would have thought? So back in 2020, I called parity on euro dollar, and I remember it coming in. I remember being short pretty much all the way through 2021 into this parity level, and then we started to see obviously cable follow suit downsides. When euro dollar was trading down, I remember a lot of people always saying like, oh my god, how did you know this was going to happen? And it's just, euro's got downside. Cable doesn't really have that downside, but the euro dollar's just got infinite downside. I can't believe it really, but when it hit parity, it was a nice payday. So after this demand level failed, we were bearish unconfirmed. So you can't get bearish, in theory, you can't get short, right? Unless you're going to just be trading the initial reaction, the initial move. So what we would have wanted to see is exactly what happened. We would have seen that rejection, the failure of that level. We would have then wanted to see this level get respected. And from there, we could have looked for shorts, right? So after we've come into here, we're looking for shorts on the daily. So you would have had that first short. If you were just smashing that off of the daily, then you would have got in about here. You would have had to stop either covering this high or this structural high. Ooh, that is tight. You would have just missed 1-to-1. So you'd have been running a negative RR. Now, if your strike rate's high enough, I understand it. Some people like to run a negative RR, so I'm not going to say whether it's good or bad. I would rather keep away from arguments. However, obviously, it shows that potentially that markets are now trying to position bearish. But what made this high fail? So what made this high fail for this price? It was this, right? So any shorts that you're looking at will realistically be coming into the extreme of the move. And when they come into the extreme of the move, you've got two plays. Are we actually bearish on euro dollar? No. Is the current leg bearish? Yes. So current leg was bearish. So we can run shorts with the momentum and the order flow of that leg into the extreme demand at around 114.5 to 115s. Once price is obviously trading inside that, we have a decision. Do we continue to short inside a higher time frame area of demand? It's not advisable, not recommended. Or do we take profits and sit on our hands and wait for the market to show its hands and develop further? Option B is my initial move, right? A newbie. Yeah, but a newbie as in, like, Obi-Wan Kenobi, right? Star Wars terminology, not a newbie as in he is a newbie trader, but it is a newbie. Thanks for joining, Saucy. I know you were here yesterday, so I fully appreciate it, and to you, Wiz, for coming back. So once obviously price was trading in here, I said 2 decisions, right? Let's look at where the markets are trading now. For me, first point of call is we're looking for that higher time frame realignment to get in short, to get in long. So I want to see on the daily something fail. Right now, this is the last area of strength. So this is the last point of supply that caused demand to fail. This is just equal highs, areas of price that are becoming weak, right? So because we failed to take out this low with this leg, this high is now targeted, which means if you are a little bit bullish overall, something in here may be where we could get long to target those weak highs. Now, if obviously those weak highs are taken out, we can continue to hold that trade into the highs, right? Or into an area where we wish to get out, whether it's 1-to-1, 1-to-2, or we run a trailer and we got taken out somewhere over here. And again, if you're trading CFDs, you can of course hold overnight. If you're on a swing account, etc. If you're on a standard account, you can hold obviously as well. And you're not penalized for that, or penalized in British language. So penalized is very much American, but penalized in futures, you wouldn't be able to hold futures contracts into the night unless you've got a professional account with a firm and they've given you the allowance to hold. So CFDs on that perspective give you that added advantage. You've not got to actively trade or scalp or snipe the markets in and out. CFDs obviously give you the ability to hold overnight and try to capture some more moves. Alternatively, you get taken out overnight. So yeah, cheers, Wiz. So coming into that leg, obviously long all the way through Tuesdays into these highs. And then obviously where we trade. So as we come into the new year, pretty much the end of the year, we've come into this. Now, what did this do? So similar scenario. This failed to take out this high with this leg, right? So that's the first point. So if this failed to take out this high, this is weak. So now we're looking for targets of this. If we were looking to see if this was actually the transition in bearish price action, that's the short. So we could actively look for short somewhere inside this leg, which obviously you're not going to smash that on the daily unless you're trading some form of momentum, which is this high was respected, this low went, you're trying to capture it somewhere inside here, or alternatively, once that closes, you're looking to get short and take it down into somewhere, which if your targets are there, your targets are there. But the reason I'm bringing this up is because this. So this is the last structural supply high that took out this low. So realistically, price will revisit that extreme because that is the causation of this whole leg failure into this demand. So we are either going to trade into this, the level's going to fail and we're going to create new highs. Alternatively, we're going to see a respect and then we're going to see a switch or a change in order flow or a change of character as we started to see the terminology increased through COVID. Now, current leg is bearish. We've seen obviously so we're trading in a range, right? That's pretty much what we're looking at. We're trading a range. So we're bearish unconfirmed on the daily because we've had the demand fail, but this demand was weak because it failed to take out this high, failed to take out this high, failed to take out this high. So now we are either looking for an alignment to get short on the daily. Now, this is just the daily. We'll break down into the 4-hour, 15-minute, and 5-minute if we need to. Alternatively, we'll just see that kind of very bearish correction PA back into the extreme of this demand range. So we'll just keep an eye on that. So we are bearish daily, bearish unconfirmed daily, obviously within a range. Now let's move down into the 4-hour time frame and let's start to really get nitty gritty on intraday price action. So 4 hour actually very briefly traded above, but you'll see that it immediately reversed. We had a hanging man candle at the very top. So if you follow price action in particular, hanging man will obviously suggest, or on a probabilistic level, identify that the market is realistically going to reverse from that top and trade bearish. So there's always that consideration. Now, doesn't necessarily mean that you're selling on that particular price action, but it does mean that you want to keep an eye out for where the market's going to go next, kind of like a doji or a shooting star or whatever. You try to understand it just so that you get potential ideas of what the market can do, but it isn't a guarantee at all. So we had the point of demand. This did break above that high, but it immediately reversed. So it's not just about breaking the structural high within the momentum leg, it's about what it does after. So we've come in, we failed, we've come in, we've respected, we've come back in, and we've started to range. So if we look at this was that high, it's been respected, we're then ranging. We've then broken down below that leg here. So now we can start to look for, okay, is supply going to take control? Yes, supply takes control, right? Ebbs and flows of the market. We're continuously breaking down lower lows, lower highs. And then on a 4 hour, you could get short from, this is clean, this is clean. We look down into the M15, M5 realistically. Maybe you go down into M2, M1 if you wish to. Just to get intraday PA, just to get a better execution because markets are fractal. So you could have, of course, followed the momentum and the order flow on this bearish leg to get short. Now, targets are structural points, right? So you've got this structural point here, which would have been target 1, maybe. You've got the extreme on the daily, which is down at 115, which is your overall target within that range, where realistically you're going to be taking the majority of your clip off of the table. You're going to be looking at taking 80, maybe 90% off of the table if you were holding that whole leg down. And then realistically 10 to 20% leaving on the table, leave some crumbs on the table just to see if that market's going to continue breaking down. Let me just get some of these drawings off the screen. So you'll see me go back a little bit just to clean it up for you all, because I want you to be able to see. So again, remember, weekly, monthly timeframes are very bullish. So of course we were going to be looking for shorts into those legs. But breaking down obviously on the 4 hour and the 15 minute, we can comfortably see that we're looking for shorts. So yesterday's price action, corrective bearish. Like, I would have got short. If you look at the way this market is, I don't really trade FX much anymore. I used to love trading FX. But with limited time, I tend to only trade a couple of instruments specifically for time based. I'm far too busy to actually fully actively trade across multiple instruments, multiple asset classes, derivatives, CFDs and futures. So I have to kind of time things wisely. But I keep a breath with the market every single day because I do invest and I do trade. So after we obviously swept that structural high, you can see that we're pretty much tracking that MMA. Obviously, we've come into point of demand. We failed. This is the 4 hour really kind of intricate. So we've come down, retested, supplies respected, come back down, retested the range of supply. So this is a lot bigger. So if you look here, this is an expansive leg of supply. So we've respected that. We've then got demand holding. So why is demand holding if supply is in control? That's a question you need to ask yourself. So why is supply holding? Sorry, why is demand holding if supply is in control? And here's why. So demand held to come back to supply, and then supply continued to take control. We took out the leg, so we created another lower low on price. So took out that previous low, come back in, and now we're looking for shorts actively on Wednesday. So this is where I would have been looking for shorts from. Execution wise, entirely up to you. You may have got in on a limit order, so you may have been looking to get some form of order in there that gets you tagged in. You may have looked for a market execution, but for me, even though we've come to test these levels, I always look at where did the last point of low come from. So it would be here for me. I'd then be looking to get short from inside here. So not the best execution, right? Not the best execution, but for me, I'd be looking to get short inside here. I'd have my stop either above this high or this high. I'd be looking to run it. The safest place realistically is above the volume high at about 117.02s. So just above that big round number. Realistically, on a CFD account, I'd still be holding this because I wouldn't have got my R available. Targeting negative A25, ATR, negative 25s, negative ATR 50s is realistically where I'd be targeting. And again, I'd still be holding this on a CFD account because there's no reason for me to close it. So that would be my short from yesterday. Coming into today again, let's have a quick look. Let's look at where supply was last held. So this low is respected. Let me just highlight this all to you. So this low is respected. We had a brief break below, but you can see that we broke below and we traded right back into it. Supply. This is very corrective PA. So you're in this short doesn't necessarily mean you're going to scale in. It means you keep your just keep your hands underneath your bum. You sit on your hands as best you can, and stop being a prick for a tick. Basically, this whole area is horrible. Like, this area of price action is disgusting. You may have not even taken this short on the proviso and basis that this PA is fucking horrible, especially on the 15-minute. Maybe down on the M5 it's going to clean up, maybe down on the M2 it's going to clean up, and that will realistically probably happen as well as we drift down. But this is realistically the point of supply that you try to gauge onto. I mean, I don't like this, but it is definitely a point of supply, because obviously it caused this low to go. But it's just horrible. I feel like this is going to do this, and I know you don't trade feelings, but when you get kind of so much experience under your belt, you just see things so many times, and this price action is so corrective that ideally I want to see it develop and mature. I'd want to see this low go. I then want to see this get respected, and then I'd be looking for short from somewhere inside here to continue to the downside. I'm not really interested in being the first in a move. You know, many years ago, 18 years ago, I probably was, but it's not so much me. You know, when I started sitting on the desks with people and seeing how they were trading, they weren't trading 1% of an account either. They were trading big. But let's go down to the M5 to clean up this price action. So the price action does clean up a little bit nicer. There's probably a better execution inside here. So if you're going to hit M5, M5 is where I tend to hit at intraday moves, even across ES, US 500, and of course FX. But look, let's clean this up. So this was the last high that failed. This was the low that caused that high to fail. So this is the low that we're looking at. We would then realistically look to see if this area of supply gets respected, which it does. It's the same M15 level, just obviously tightened up. So let's remove that just as an idea. So let's remove that. Once this supply has been respected, we can pinpoint that, and we'd be looking to get short inside here, which is realistically that same M15 candle. Stops are pretty much the same. So we'd be looking at potentially getting an executed in somewhere in this candle. It could have been here at the low on the close. It could have been waiting for that move to actually breach the low of that previous candle, which would have meant we got taken in here. Again, stops would still be above either this high or the volume high down at 117.02s. So realistically, let's just put it above this structural high, because price could have obviously come up and actually created more volume up here, but overall supply was in control. So we're quite happy within that range. And it actually gives us a worse RR by me putting it here with that there. So I'm not phased. You know, we're looking at, again, holding it down to negative 25 ATR, negative 50 ATR. Doesn't necessarily mean it's a point of target. It's a profit taking area. It just means that that's what we're trying to see price run trade into. This is euro dollar. Euro dollar, Prince Endar. I am a big fan. Thanks, Art. Hope I win. Hope I win too. W in the chat. I think, can you do W's? No, that's extremely childish of me if I tried to do that. I've been trying for a long time. I still haven't won, but I hope that this time God will help me and I'll win one of those who won, God willing. Hello. Hello, welcome everyone. Welcome. Help here from the Discord. Hi, Chimp. Hi, Niraj. Well, hi, mates. It's lovely to see you all here. So we're just breaking down euro dollar. We were congratulating everyone on the 7,000 ES target that got achieved yesterday, which we called on Monday. So we were looking for longs Monday, Tuesday, Wednesday. We traded into 7,000 on ES, which is euro dollar which is S&P 500. We're just breaking down euro dollar. If you want to go back and check Monday, Tuesday, Wednesday streamed, I thoroughly recommend it. There's a lot of nuggets in there because we broke down intricately cryptocurrencies, FX, commodities, including metals such as gold. We also broke down the indices. We broke down FX, time and time again. What's your thoughts on gold? I'll definitely touch upon that again. Something I touched upon on Monday, Tuesday was just really that rotation out of safe havens into risk. So rotations out of the dollar, out of yen. But whilst we saw buying in stocks, which is risk, we also saw hedging in gold. So we saw gold continuing to trade higher, indices continue to trade higher, stocks continue to trade higher. And I'm fully aware of this glitch on the camera. And it's still, I've changed settings massively. So if I'm going to have to delete that comment because you can't put WhatsApp things in here because they could be spam. And I don't want anyone getting conned or spammed with that crap. So please don't send WhatsApp channels in. It may be harmless. It may be, with the best intent. But if you're looking to share your information, get inside the Seacrest Markets Discord. If you keep sharing it, I will block you. That's the second time you've shared it now and the second time I've deleted it. And there's no personal feelings here. It's just business. You can't share WhatsApp stuff because if people get scammed and spammed, that's on our conscience. I've never won a Seacrest challenge. Why? Random selection, John Selorm. Everything is done fully automated using third-party tools and software. We, as a company and as a team, have no bearing on the results that come out, right? So if I was to do a giveaway right now manually, I'd have to go through all of this and go, who do I want? And I'd see where my cursor stops. But we don't want bias. It's like trading. We need to come into the markets, be adaptive, change our minds 5-10 times a day. Today, unemployment claims. Yeah, unemployment claims today, so as well as non-farm payrolls. So realistically, Wednesday through Thursday, trading into Friday, markets can be very corrective and range bound. And I think realistically, that's why we're seeing this choppy price action. Very choppy, low expansive, no real volatility in the market because this is the following. This is the first unemployment claims and NFP data since Christmas, first month of the year. Obviously, it's going to revert back to December. Now, December numbers will realistically be inflated. Why? And drop an answer in here. Why do you think December's unemployment claims and non-farm payroll data will be inflated on this reading? Why will it be higher? If you can answer, that would be great. Yeah, correct. Ryan said something really valuable there. And it's something that on X, I'm talking to a lot of people about at the moment, because for the first few years of prop, everyone's always about, let me get a massive payout, share the certificate, and everyone thinks I'm an amazing trader. They blow the account and then they buy again. So their revenue cost to payout ratios is a lot worse than people think. However, there's a couple of people that I've interviewed recently and that I'm trading with or that I trade around. And I've been surrounded by some incredible traders over the years, both retail and professional. And it's not about how much money you make. It's about how long you stay in the game. When you're trading up at $500,000, $1 million, or 7 figures plus, you could be trading spot 1%, 0.25%, 0.5%, spot 7.5%. And the notional value on making a couple of percent a month is realistically on a quarterly, half annually basis is going to be more than the average income within your country. when you look at the UK, the average earnings in the UK is 35,000. In the US is 60,000. In India, I believe it's about 2,500, 3,000. So look at where you are. And of course, you want to be better, you know, you want to earn a lot of money. I get it. But don't over risk just to get the result. Focus on the long term. You'll be a better trader for it. All right. So let me quickly just finish euro dollar, because I've definitely rambled on for 31 minutes covering pretty much one pair. But that's just because I want to make sure that you get the best details and the best analysis and information out there, because I don't think no one's going to be able to break down the charts better than I can. So coming into this, obviously we've got that very expansive range. Obviously it's very range bound PA, very corrective. We know why. Wednesday, Thursday trading into Friday with the non-farm payrolls. So we're going to get very small legs, very thin legs. It's calm, LMAO. LMAO, I haven't heard that word for years, the way you explain market structure. Thanks. So let's just close this off. So we want to see price come back into here. If I'm looking at this for my last structural low, I can pin it on either one of these. It doesn't matter. So I'll pin it on here. I'm going to be looking for shorts inside this area. So very corrective PA, but realistically, I'm going to be looking for shorts inside here. I'll have my stop above the supply side high. I may even protect it from the previous WAPs that we're trading on. And then realistically, target one's going to be the low, which is also coincidentally the daily open. You might not get your 1R here. You're going to get your negative RR to risk. So it's not something that I would take. But if I'm going to be targeting negative 25 ATR or negative 50 ATR, I'm holding this position anyway. But like I said, we don't know at this moment in time whether going to be risk on or off. So when non-farm payrolls comes out on Friday, we could be massively positioned against the market, because the market could want higher. Which pair is this? This is euro dollar. Thanks for the chat answering. Win for the chat. So that's euro dollar. I'm looking for shorts intraday, corrective PA. Realistically, not going to be looking for trades as we trade into non-farm payrolls or unemployment claims. Very dicey out there at the moment. And just to answer the question that no one actually answered, non-farm payrolls are going to be inflated from a December's reading perspective, because we have temporary employment positions. People need to fill employment positions temporarily over Christmas, because of course a lot of consumer demand. So we'll see inflated numbers on the payrolls for December. So a couple of other comments were talking about what other instruments you want me to break down. So quick. Bring balance to the market. It's kind of it's not the right answer. Cause of the shutdown, no, not really. Seasonal hiring, yeah, well done. I missed that comment, ISO 0513, so well done, you got that correct. It's definitely choppy because of NFP, yep. Kindly zoom the chart. Hopefully I did. I'm running on 32-inch monitors, so I hope you can see them. Gold view. Let's run gold. I'll do it the old way rather than me trying to bring a new chart up, just because it will have my previous markings as best as I can on it. So gold, again, I told you about gold. People were hedging out gold into obviously long stocks, but I think realistically we're going to see some profit taking up here. And if anyone joined me on Monday, you know, I hate to toot my own horn, but back in 2017, 2018, I was buying gold for a lot of people. So go back and see that price action if you want to see it. So last structural high was this. We're trading in a range. There's no clear direction on gold at the moment on a daily time frame. I'd want to see, again, one of the following happen. I'd want to see either demand respected. Could we get a trade from the extreme back into the supply extreme? Point two, if we're long, we want to either take profits at this high, maybe 80%, 90%, because we're trading in a range. We are bullish within that range, so we could be 80% off of the profit. And then we hold nuggets to see if we can trade higher. Alternatively, you've taken 80%/90% off at this high. You're then sitting on your hands. Could there be an opportunity to get short back into the demand extreme? Now, that is only if demand and supply continue to hold. If gold breaks out here to the downside, we're bearish unconfirmed. Okay, so first point of call is where in that previous leg could we look for supply to hold, price to be respected, and it would be realistically up around that 4,500 mark. So I don't think we're going to go short, but that's based on, you know, the 52-week high basis. So usually people will go short at the 52-week high. Now, on a probabilistic basis, you are more likely to see price continue trading higher once it trades into or above its 52-week high initially. And that's because everyone will try to get short. And that doesn't necessarily mean just gold as an instrument. And I don't know why I'm doing that. You're looking at my screen in front of me, but it's there. It could be anything. It could be a single stock. It could be an index. It could be a commodity. Usually when something trades into a new 52-week high, people will try to short it or fade that strength, and it usually runs against them. So take that educational piece of info as you wish. My entries are mostly right, but I book too early. Any effective strategy to trail profits? So pro trader, really good question. I'd love to, I'm going to answer that. So don't worry, I will answer that. But I'll give me a second and I'll answer it. I want to just break this down before I get on a tangent again. So once this low goes, we're going to want to see price get respected. Now, that is the first area of supply that's respected. So it could be very premature. So it doesn't necessarily mean the market's going to go short. It does mean that we've confirmed bearish. As long as we start to see price moving away and taking this low, then we've realistically confirmed, right? So we could look to get short on the break of something, maybe the VWAP from this low down. Alternatively, if you're going to be trading from your M5, your M1s, you could be looking for a change of character, another failure, and then we get that confirmed entry and we look to get in somewhere in here. But at the moment in time, we are contained within a range. The high is intact, the low is intact. We are bullish still. So until we either see the high go or the low go, there's nothing in on the daily for me. Switch down into the 4 hour on gold. Let's get intricate. So you can see the markings on gold for me. And let's see how closely they've tracked. So, you know, we had the long from yesterday. The long from Friday, which ran through over the weekend. We've got this point of demand at the extreme. Again, why? Because supply has held. Oh, that's embarrassing. Supply has held. You can see that. So we could have looked for shorts off of that supply. Again, intraday. Thank you. Appreciate it. Higher prices on gold. Yeah, so Saucy, like I said, we're bullish. I need to now see confirmation. Either price is going to be rebalancing into what we call the discount of the leg, maybe even the extreme of demand. But we're bullish PA, but we can't get long for a hold above 4,500s until we see the market show its hands. You know, there is no point me just buying aimlessly. You want to be a little bit more like a sniper. You may not necessarily want to catch the first quarter of any move, but you want to try and get the best possible area of execution, and then with the right amount of risk management. Once you manage the risk, your execution be quite shit. But as long as you're getting an entry that's in line with your edge, that follows your rules, doesn't matter. So I am still bullish, but overall, you've got to remember: are we going to start seeing a rotation out of risk, out of safe havens into risk? If we do see that, and we don't see that hedging that we're seeing, gold's lower, silver's lower. That's not an opinion. That's based on analysis of traditional market cycles. But at the moment, intraday, we're ranging. So we had the longs intraday into the extreme. We've got the shorts into potentially this area. This could be the point of demand where we do see markets start to trend higher and we see that level go. Alternatively, we're going to get something where I kind of call it your double top, your camelback, which is where we're not just going to go higher straight away. We're going to go like this. We're going to come down. We're going to go like this. We're going to start seeing people get long. We're going to trap the shorts. We're going to trap the longs with shorts. We then come down. Everyone starts getting short. We then trap the shorts and we get long and we rally into new all-time highs again, 4600s, 4500s. And that's what the market does to people time and time again. But people are far too ignorant and impatient to see it. But that's traditionally what happens when we start to see tops. You won't immediately see a V pattern reversal. It doesn't just happen like that. You know, we'll get a double top, we'll get a hump pattern within a camel, so we'll get the 2 humps, and then we'll see the market trade lower. We'll get shorts trapped, we then get long, we rally into 4600. Now that move could play out all the way through 2026. So that means equities could rally all the way through 2026. It means indices could be seeing 7,500 on ES. It means we could be seeing 49.5, 50,000 in the Dow. So, you know, we just have to be patient. Coming down into the M15 in gold, because we can see the range. We don't need to keep talking about the range. I mean, there's so much potential in the M15 on gold. But remember, when metals move, they rip your face off. So bear that in mind. It's one of the most over-leveraged, over-traded instruments, and it's usually incorrectly traded. So what broke this high? It was this. What broke this high? It was this. So from a support perspective, we're looking at these areas of our support levels on an intraday basis. We'd want to see these 2 levels realistically go before we look for supply side taking control. What happened? Supply went. Are we going to come back into the extreme, or are we going to come back into the area of supply that took that structural low on that front leg? We come back into the front leg structural supply. Then we can look for intraday shorts to get a better risk reward. Realistically, after this supply is respected on an M1, M5, I'm sure there's a better entry inside there. We could get short inside this, trade above, trail that stop above that high, and then realistically target ATR 50, you know, about here. Negative RR, don't like it. So realistically, you want 1 to 1, 1 to 2, unless your strike rate is like 90%, right? And your sharp's above 1.82. So I doubt any of you have calculated your sharp. It would be interesting. Calculate your sharp. Know your trading edge, team. You do not want to be someone that pushes a negative edge, something that decays, because otherwise every single year you're going to be switching strategies. You just need to know your sharp. Very informative. Thanks, Saura. Very helpful live stream. Thanks, Mohammed. Ariba, good outlook on gold. Breaking it down at the moment because chalk is only a signal, not exactly on eye. Now, change of character was actually a term that people that I know put together. I'm not saying they created it, because ebbs and flows of markets, it's just the chalk element, and it took off. It was literally like overnight people started saying chalk, and it was crazy. And he's got, you know, he's still trading. He's great. Thank you, info Dr. Kaisani. Very good morning to you all. What is a market maker sell mode model? Oh, model. Sorry, I thought you said modeland. Market maker models. You do realize market makers are there to provide price. They're agnostic to markets. They don't care whether the market goes up or down. If you come in and say, I want to buy X, they have to provide you with a market. If you want to sell it, they have to provide you with a two-way price. You take it or leave it. They're agnostic to. People talk about market makers like they're here trading against you. CFD brokers, prop firms, market makers, the FBI, whoever you think kidnapped someone. It's ridiculous. I'm not going to go into that, but they're agnostic. There's no, they don't. There's no stop cascades. They're not trying to capture stops. They're not trading against you. Unfortunately, and this isn't directly aimed at anyone on this stream. Unfortunately, people just put their stops in stupid places. I don't trade gold. Good info for those that trade the. I'm just covering everything, Saucy. So I know you've commented on gold up, and I appreciate that. And gold's going up this week. Listen, Art, don't put a contextual time frame on when gold's going up, because you're now going to trade longs, and depending on how you're trading, you could be going through drawdown, and that's okay. If you're a swing trader and you're holding it for the 45s, 46s, whatever, wicked. But don't just say it's going up without understanding what could happen in the interim. Try and trade the ebbs and flows of the market, because where price is fractal, if you do trade intraday on lower time frames, you're going to see a change in market structure. You're going to see a switch where supply takes control on gold and demand is failing. Thus, you could potentially get short gold to realign with your higher time frame bias to get long. So you could realistically trade both sides of the market and see better returns if you wish to. But remember, as a trader, you need to be elastic with the market conditions. You need to remain unbiased, and you need to trade with the ebbs and flows of the market if you are a day trader. If you're a swing trader, wait for market to come back into your area of levels that you're interested in and get long. You know, if you think gold's going to be trading up at 7,000, 7,500, I'm not saying they are, you know, in a couple of years' time, and you're a swing trader on a personal account, get long. Alternatively, just go buy physical bullion. You don't have the swaps and overnight conditions, and you don't spend as much. You just have storage conditions, storage costs. How do liquidity voids influence price movement and institutional decision making? They're just rebalancing of pricing. People like to trade what they call IFVGs, or areas of imbalance, because obviously that's where we've seen a lot of volatility and elasticity in price, and it means that there is that void. Content is priceless. Thank you so much, Talavai. How to win 10k? You mean a challenge? Keep showing up to the live streams. You increase your probability odds. That's it. Had a good short yesterday. Good short, nice in gold. Yeah, good short. Flip zone chocks. Yeah. Confirm internal breaks of structure. Yeah. You're correct, Onai. You probably learned from a company called Phantom Trading. If not, you learned from everyone that copied Phantom Trading, which is now PTM Trading FX, which were pretty much the people that discussed flip zones, chocks, breaks of structure, internal momentum, order flow, etc. Listen, just to clarify, I take offense to what you said, Luffy, but I'll take it as a compliment. Yeah, I won't comment on it because I don't want to bring that name into the chat. So non-farm payrolls, this is a question that's been asked by D. Oscar Dio10. Non-farm payrolls have lost their impact over the last 12, 18 months. They're still high macro red folder reporting events based on the historical events, and they're still volatile, or can be. But we have seen less volatility around them because traditionally, when we saw the way the employment factors and macro conditions and GDP data from the US was coming out, we wanted to see above 200,000 readings in terms of new numbers. But now it's almost unrealistic that we're going to get 200,000 in employment each month. So we're seeing, 120,000, 150,000, and every single month. And I would say 50% of this chat and anyone that views this stream has never watched the revisions. So each month non-farm payrolls come out. On tomorrow's reading, if previous non-farm payroll data had been printed, for example, watch the revision. 8 times out of 10. Well, let's go 10 times out of 12. 10 out of 12. So 10 months out of 12. There is a negative revision. A negative revision. So they will overinflate. They will overinflate non-farm payrolls. And then the revision comes in because data's lagged. And they revise down. So you get the revision of the previous month plus the NFP data of this month. Nice, well done, pro trader. Good Asian trades. Smart money traders focus on inefficiencies because they do. Ideas on GJ. What is your view on gold for tomorrow? For tomorrow? Tomorrow, like Friday. I don't have an opinion on gold for tomorrow. I'm honestly blown away. Thank you so much. Can you analyze Aussie yen? I can analyze any cross as long as I've got time. Everyone talks about displacement. The way you broke down internal structure and explained, yeah, wicked. Cheers, Zon. You can't. The FBI trades too. No, there's a story. The FBI. So let me just quickly touch upon that. There's a story of someone that got kidnapped by someone, and I thought it was the FBI, but I don't know. But just to clarify, these are years in the markets. This isn't something that's been taught over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years. This is nearly 20 years of experience. I could break down any instrument. What's the best support resistance indicator on TradingView? I don't have a clue, Ryan. I don't have a clue. I draw everything manually from a support and resistance perspective, whether it be a range, a demand zone, a supply zone, a support level, a resistance level. Everything is manually drawn on. So I would traditionally just use your trend line tools, and then I'd use your alt tab to pretty much hold as a horizontal level or as a vertical level as well. You can obviously do that. Alternatively, you can just magnetize it to price, and it can obviously snap to it like a trend line. But other than that, I'll just use your standard rectangular tool, which obviously is customized, and you can pretty much create any type of demand supply range level that you wish to. From an indicator perspective on charts, realistically, you're going to be wanting to use your SVP HD. It just gives you your volume. But if you're trading FX, it's not going to be all of market. Remember that. It's realistically only available on some brokers, on some charts, on some data feeds, because it's only based on the volume that's coming from their brokerage / liquidity provider. But some firms you can't even get it on. But on indices, for example, it's available on ES. And then you want to be using your ATR tool just to understand it. And again, it's not necessarily a take profit area, it's a target. And you can obviously be agnostic to that as well. What else? What else could you consider? You could consider your anchored VWAP. Again, that's a tool rather than an indicator. And this is what I more so use for my stock. So it's just to get an idea on price movement and range rather than an RR tool, because I don't realistically have an RR tool when I invest in stocks. So I just run it up. Blame the market makers for their SL payments. Yeah, they do. Grateful, appreciated. Just joined you guys from the Discord. Thanks, Ashmit. Currently sits at 3.9. Yep, absolutely, you're right. Yeah. Aussie yen. Holy crap. Holy crap. What did? Not sure about that, Leone. Well done, Info Jakai Sani. Can you please give me how to be profitable? I'm 19. All right, first steps. Delete Twitter, delete Instagram. Don't watch any traders that flash the cash. Reason I say that, look at big traders, big traders. Realistically and rarely, from a marketing perspective, I completely get it. I really do. I love seeing certificates of traders from Seacrest Markets. Love it. Absolutely love it. And what Seacrest Markets is launching, so if you trade with Seacrest Markets and have got a payout, please grant us the permission for a couple of things. One, write to us because we want to interview you on our funded trader series. One, write to us to allow us to put your certificate up on our trader wall of fame. We want to promote you. We want you to be known. We want you to be out there. We want people to realize that Seacrest Markets is such a cliche. It's there for its traders. I nearly stopped to say that. I don't think I could say that. So coming back to that, I don't even know who Dodgy is, chimp. I've been in the markets for nearly 20 years. If Dodgy's a good trader, good luck to him. I'm not gonna slur anyone, but I don't really know the word dodgy. It sounds like he's dodgy, but I don't actually know the comment. I know there's someone on Twitter called something dodgy, but I don't know. But to clarify, no. Please give me a 10K account. Hopefully, if you win, I'd love to. Sardar, how to survive a drawdown. Risk management. Just to clarify, I've never won a challenge giveaway either. Thanks, Art. Great comments in here, really, there are. Wow, there's too many. Yeah, so the Venezuela issue, if you want to go back to Monday's live stream, Venezuela is covered massively in there. Obviously, I still really haven't done a full market breakdown across the metals, the indices. Obviously, the milestone in DAX at 25,000, cryptocurrencies with the support on BTC at $92,000. But overall, I think we're seeing a rotation out of defensive, moving into rotation out of gold as well, back into cash, because I think we're seeing investors wait for Friday's job reports. So non-farm payrolls, officials numbers confirm that it's going to be a weak ADP data from Wednesday. Obviously, expect a massive rally potentially in gold and Bitcoin as rate cut expectations for March skyrocket. So what we're seeing is rotations out of it all. Rotations out of it all, sitting in cash, waiting to be repositioned for Friday. Fundamentals follow technicals. What I learned something new about NFP. Thanks. No worries, Gadiel. I really wish I had a job. I wish you did too, Ashmit. Listen, there's two things to comment. If macro traders and economists were as good as they are with their analysis, they'd be the best traders in the world, but they're not. You have to combine everything with a pinch of salt. Fundamentals, technicals, and you have to put them into some form of quantmentum edge, and you have to utilize it all. So understand the bigger picture from a macro perspective. You've got to realize that it's looking on a backwards looking indicator. So non-farm payrolls, how many did it hire? ADP data, unemployment, how many people are unemployed? Doesn't tell you what's going to happen over the next 3-6 months. The biggest key data insights are going to be GDP, interest rates. But again, realistically, on an interest rate perspective, you're looking on an FX base of interest rate differentials. So if the euro saying the ECB cut interest rates, but the US Fed doesn't, what's the interest rate differential there? Is there an opportunity to trade the rate differential? Are you a billionaire? No comment. I'm definitely not a billionaire. I am not allowed to trade with Seacrest because I work for them. And it would also be a little bit silly, right? I mean, I could probably trade for the point of education here and for the fun. I'd happily do that. But I'm not trading with them to get a payout because I work for them. And it's the same as if I give you an affiliate code or a tracking link, I don't earn affiliate commissions. Any sale that goes through me, you're purely getting that naked discount. So I will push Seacrest Markets for the tracking link under my own to see how many people buy through me. But I don't take any remuneration from that. Unlike the majority of people that do the live streams, they are unbiased and they do not care. They will push every single CFD futures prop firm that they possibly can, and they'll get paid for it. 2 decades, chimp. 2 decades. Why are you guys spamming comments? I haven't got a clue who's spamming comments. Oh, Seacrest Markets, 3 hearts. I kind of see the spam now. Fair. That's not us. Video is pure source. It's live every single day, 8 a.m. till 9 a.m. GMT. Now, I've actually run out of time to cover the other markets. So please come tomorrow. Write those comments in the chat early on. If you want me to break down Aussie yen, sterling yen, join tomorrow's live and I'll break them down for you. Our Discord is where you get information from. Twitter is where you get information from. And our FAQs is where you get information from. 3 points of contact, as well as sign up to our email campaigns, because inside our email campaigns, there's exclusivities to discounts, exclusivities to potential giveaways, exclusivity if you're a trader of Seacrest Markets on the prop side to fund your account. You will get a deposit bonus. So if you're a trader at Seacrest Markets, if you go and open up a CFD personal account, there are deposit bonuses, etc. What about the prize? You know what? My marketing team have not even told me about this prize unless I missed it because I'm so focused on the team screens here. Do we have any giveaways? Give me a second. So, this completely shows you how I am not here to sell, right? 47 minutes ago, my marketing team told me to tell you all that you get 35% off all plans during this live. First 10 people only can redeem it. It expires today. If you enter the code Warner35, first 10 people only, right? I did not even know that was a thing today. Someone has hosted a giveaway on behalf of us. East and West Seacrest. Seriously? Where do you come up with this? Keep delivering this high quality knowledge, bro. You're changing the game. Thank you so much. Appreciated. I will continue to deliver as long as I'm the host, Monday to Friday, 8 a.m. to 9 a.m. GMT. If I can, I will start hosting US live sessions as well. So as we trade into the US markets, 2 10K accounts on live stream. So Dar, let me speak to my board. Let me get confirmation that I can do it. I'll try and do as much as I can for you all from a giveaway perspective, but keep tuning in. This is the first few days, 4 days into the lives, right? If I win, how do I redeem a giveaway? Well, if you win, you'll be told of how you redeem it. I actually don't know what's going on with this giveaway. That is completely unorganized and that's completely unprofessional of myself. I apologize on behalf of myself and the team. I don't even know. I need to find where this giveaway comment is. Ngia, if you're here, do me a favor and just send me a private comment because I'm clearly needing to pick a giveaway winner, right? Or someone is. Increase the giveaway. Yeah, cool. I'd happily do that, but I can't. If I win, how do I redeem? It's on Discord. Listen, okay, so look, it's on Discord. Go over to Discord, join the Discord if you can. If you're not in the Discord, I'll send you a link right here. Give me one moment. Uno momento. I am watching from beginning for 2. Sardar, you should come for the quality of the content, not for the giveaways. I didn't even know. Like I said, Elofitime, I didn't even know there was a giveaway. Give me a second. So you have to enter, like, share, and comment on the live stream. Oh, that's why I've been getting so many comments. Cheers for the comment, Art. So we're doing 2 10K accounts. I didn't, Saucy. This is the point. I'm here to provide the analysis and the live stream. I'm not here to sell. But realistically, there's no better place to trade. Stream is glitching. Yeah, it's my camera. It's a Logitech 4K streaming camera. I've adjusted settings manually. I've adjusted everything. I've adjusted browser settings. I've adjusted the system settings. Everything. So, listen, keep supporting. You can spin the wheel. What wheel? And Gear, you need to send me a comment, mate, because people are going off here. Pick 2 winners after this live stream. Spin the wheel. Media assets, banners. Private chat, 4 comments. Let's get it started. Give me a second. Someone's going to have to... Let me say something. Let me ask, because no one's answering me. You guys are so keen on this giveaway. Pick me. Just to clarify, I'm not going to pick anyone. The tool is going to pick someone. Listen, you should watch the live stream every day. If you want to be a better trader, watch the live stream every day. You might have to come back tomorrow for this giveaway, people. Yeah. Yeah, I hope it, mate, what does that mean? And? How do I pick then? Sorry, team. Sorry, everybody. This part is ridiculous. Don't forget me when sharing. Send us a link where we register, then you spin the wheel live. You can't just create giveaways and expect me to know how to create them. This is getting on my nerves. Aaron. Nice, Gadiel. Thank you so much. Just pick 2 random comments. But that's bias, because I'm just going to do... I don't know. I like it to be unbiased, thanks. I'll just pick... All right, so someone's going to pick 2 for me. I'm not going to do it because they've messed this up. I'm going to let them sort it. Cheers, Gadiel. Maybe I'll increase it. What's your view on gold? You're going to have to go back to the recording of this live stream. I broke down gold every single day, Monday, Tuesday, Wednesday, and today. Win in the live stream. Pick me. Thanks, sir. Good knowledge. Wow, there's so many comments. I've never been gaslit so much in my life, just for an account. All right, so it looks like Ismo, Capital, Official, and Mirza-FX have won the 10K accounts. Please email ngia@seacrestmarkets.io to claim your accounts. So everyone, thank you very much for tuning in. Come tomorrow. There'll be another giveaway. There'll be another discount. I don't know what it's going to be. Aaron, we don't want them to leave. We want them to come for the value, stay for the content, ride for the giveaway. Come back tomorrow, John. You may win. Listen, the more you show up, the more you increase your odds of winning. It's the same like trading. The more you learn, the more you find an edge that works, the more chance you've got at actually passing your challenges and getting funded and actually going on to get a payout. Far too many traders get 1 or 2 payouts and blow the account because their edge is negative. Be a trader who breaks that norm, goes on 5, 10, 15, 20, scales the account, becomes one of the big echelons and big extremes traders of Seacrest Markets. I don't know his theory. I've said this for many years. I'm not going to slander anyone at all, but a good friend of mine absolutely annihilated him in the Robbins Cup, and he was nowhere to be seen. And he has an edge for a ledge. That should give you an indication of who I'm talking about. Giveaway's already been picked. FX King. Wow, that is a provocative term. That is close to saying a naughty word. But everybody, it's been a great stream. Tune in tomorrow for the breakdowns that I didn't have time to cover. So if it was the yen crosses, come back tomorrow and I'll break them down. Just make sure you drop the comment early on. And I'll see you all in the Discord, and I'll see you all tomorrow on this live stream. But everybody, thank you very much for coming. Like the video, comment underneath this video. Please subscribe to our channels. across YouTube. Follow us on Instagram, follow us on Twitter, because that's where you're going to get the best discounts and the best giveaways. And of course, turn notifications on. So no matter what platform you're on, please turn notifications on so that you're prompted to all of the lives we host, the funded trader interviews that are being launched, and all of the comments and clips that we release over the next coming weeks. But thank you all for joining, and see you again at this time tomorrow.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets, lighting the dark.
Seacrest Markets leading the way, making the move every single day. Charts in the vision, mindsets aligned. Traders power, no fear.